I run the Association of Foreign Investors in Real Estate, which is a group of a couple hundred institutional firms around the world, 25 different countries that are focused on cross-border investing into the United States. It was a panel of investors that are focused on the US, talking about the US markets for Canadian investors. Canada represents the largest bulk of capital that's been coming into US real estate over the last 20 years versus all the other countries around the world. Very important market for us in the US, but certainly I think a very important partnership between the more kind of institutional focus and vertical focus of the property firms here, mostly driven by pension money and being put to use in the major cities in the United States. We are going through a rough period, there's no question. Tightening of monetary policy is affecting all of us and forcing a reset of value in terms of the cost of our assets. Difficult if you own that property now, great if you're looking perhaps to acquire it at a better price on a go-forward basis. So we talked on both sides of that. Most of the activity over the next 6 to 18 months is really going to be probably around debt. Debt funds, debt investing. Very difficult for equity investors at this point in the US markets. So there's a lot less activity there. We'll see how that evolves. And part of the problem now is no one can predict exactly how this is going to go. The Fed is going to do what the Fed is going to do. The central banks around the world are going to do what they're going to do. But generally speaking, I think there's a growing consensus that the next 12 months are going to be the hard time, but we're really kind of setting ourselves up for the next period. It's very difficult to deny that a big part of what's happening is a rethink in terms of how we use our central business districts, how we use office. We're still really only in general across the country at 50% of office utilization compared to where we were before COVID. And a lot of the trends that drove work from home and a more flexible office schedule were already in place before COVID happened. It's just we've certainly accelerated that. So a lot of what we're focusing on that front is what happens to office. Certainly the best quality office and the best locations are doing well, but there's a lot of other office that whether it's something that somehow we can improve again, we can bring them back, release them, or in some cases even convert them into other uses such as multifamily. There is a multifamily shortage or a housing shortage across North America. The US and Canada are similar in that way. We need to create more units of housing and we need to do it in cities where jobs are, et cetera. So there's a lot of drivers for that, although the cost isn't significant. And until the values go down in this kind of great repricing that perhaps we're going through over the next several months, it's going to be difficult to pencil out those kinds of deals. Another driver I think that's happening, especially in the US, is for 20 to 30 years, we've had a general migration that's been accelerating towards the southern cities and the smaller cities, away from the larger gateway markets that most investors invest in, such as New York or San Francisco, Chicago, Washington, DC. That may be overstated in that, yes, there's a lot of migration to those southern markets, but there's also a lot of immigration into those northern cities. So I think it's a complicated picture. Not only that, the advantages of the southern cities, cheaper, lower taxes, not a lot of people, not having to deal with big cities, those are changing as those cities are becoming more successful and there's more migration. So it's not going to be a one versus two kind of thing. It's going to change and it's going to be somewhat complicated. So a lot of the discussion around migration is a good discussion to have when it comes to the US. And then finally, the big factor I think that's underlying just about everything is certainly climate change, sustainability, ESG, very important issues. Canada's ahead of the United States, I think, in a lot of ways in terms of its thinking, in terms of execution when it comes to real estate in a more sustainable manner. And to some extent, the US is learning from their Canadian colleagues. But I think as we see investments in the US really focusing more and more on sustainability, and especially with the increase in federal spending in that area, especially on energy and sustainable energy, real estate's going to be the beneficiary of that. And I think it's a great opportunity to continue to upgrade the real estate footprint when it comes to sustainability. Certainly, as our research seems to suggest, international investors are very attracted to those secondary southern markets where you have a high amount of tech jobs and medical jobs, being med tech being a big part of those economies. But you're seeing some tech pullback and you're seeing some layoffs that are occurring, and that's going to impact some of those markets as well. But I think you're going to see markets like Boston, Atlanta, Dallas continue to do very, very well over the next 12 to 18 months. And I think that's where a lot of the focus is. You see smaller markets like Nashville and Austin are really big favorites for everyone, but they're to a certain extent in danger of becoming oversubscribed. They're very small markets and you have a lot of institutional investors kind of clustering in those areas. But cities like Atlanta can really kind of, I think, manage that kind of growth and are continuing to grow really exciting. That's an exciting story, I think, in terms of the last year or so in terms of US growth. Certainly, Florida has benefited from a lot of different things that have occurred there. And so far, the climate change issues are not dampening that growth. The thing to watch, I think, going forward is when will it dampen growth? For markets like Phoenix that have serious water issues, not to mention heat issues, Miami that has certainly seen storm damage that's horrific, it seems like every year now, but also just a general rising of the seas are very difficult for a city that's at sea level like Miami. So I think we haven't seen that really mitigate it, but it could, and that's going to be something to watch going forward.